Welcome to our auditing theory tutorial. My name is Josie De Leon, and in this video, we'll dive into one of the most important areas in PSA 315, assessing the risk of material misstatement. So by the end of this video, you'll be equipped to answer CPALI questions and understand how auditors identify and respond to risks. So these skills are essential not only for the exam, but also for your future work in audit. So we're going to define and understand risk of material misstatement, distinguish fraud versus error, identify risk assessment procedures, recognize significant risks needing special audit consideration, understand when substantive procedures are insufficient, and learn how to revise risk assessments during the audit. So what is risk of material misstatement, or we call it RMM? So it's the likelihood that financial statements are misstated even before the auditor does something or does anything. All right, it's the combination of IR and CR. IR is the inherent risk, and CR is the control risk. It actually occurs before the audit starts, and the job of the auditor is to identify these risks and respond appropriately. So a common CPALI question: what's the difference between fraud and error? So fraud is intentional, while error is unintentional. Fraud involves deception or theft, while error involves mistakes or oversight. Fraud may involve collusion, while error is usually isolated. For example, fraud is intentional, like overstatement of the revenue. If the for example, the general manager's KPI is based on the revenue, so there's a high risk of that person doing some fraud. Let's say to make the revenue or to record the revenue higher than what is supposed to be, for example. So that person, the general manager, can have, the bonus, which is based on the revenue, as what we discussed. While errors, for example, on the other hand, is unintentional, so it could be mistakes. For example, an accountant posted a journal entry instead of debit. That person, the accountant, recorded it as credit. So we know that it's purely an erroneous mistake. Both are error, but both fraud and error can lead to material misstatements, and both will need to be addressed properly. Okay, either it's intentional or unintentional. So to identify risks, auditors apply risk assessment procedures. These include asking questions, analyzing data, watching how things are done, and inspecting records. For example, we may perform, or the auditor may perform, a walkthrough to trace a transaction from the start to finish. So walkthroughs of transactions or processes, yeah. So engagement team discussion, team meetings to discuss RMM and fraud risk. Okay, these discussions help uncover areas where misstatements are likely to occur, and they also promote professional skepticism, brainstorming on what could go wrong. Okay. Significant risk, characteristics of significant risks. It involves complex or judgmental areas, include fraud risks, require special audit consideration. Okay. For example, revenue recognition often qualifies as a significant risk, especially if the management, as mentioned to you, especially the management, the general manager, has incentives, no? Incentives, or the KPI is based on the revenue. So there's a tendency, it's highly likely that they are going to inflate the revenue or the earnings. So there are situations where substantive procedures aren't sufficient. For instance, if you rely on an IT system to process transactions, you need to test the controls around the system. So otherwise, you may miss key risk areas. Okay. Substantive procedures alone may actually miss system weaknesses. Revision of risk assessment. Risk assessment is dynamic. If audit evidence changes, revise the risk assessment. So always adjust the audit approach as needed. Okay, that's part of being an effective auditor. All right, to summarize, understand how RMM arises, apply effective procedures, engage in team discussions, and be flexible in your approach. So these principles help ensure audit quality and exam success. All right. So now we can go to CPALET type exam questions. Let's answer a few questions here. All right, for question number 1. Which of the following best describes the risk of material misstatement? A, detection risk. B, audit risk. C, inherent risk. Plus control risk. And D, business risk. You may pause this video so you can think for the correct answer. All right, the correct answer is inherent risk plus the control risk. So R&M, or the risk of material misstatement, is composed of, remember, inherent plus control risk. This is according to PSA 315. Okay, now let's go to question number 2. Which is considered fraud? A, mispostings due to misunderstanding. B, overstating revenue intentionally. C, data entry error. And D, recording cash disbursement in wrong account. You may pause this video just to think. The correct answer is letter B, overstating revenue intentionally. So this one is a fraud because there's the word intention. No? Intentional misstatements like this one, the revenue manipulation, it's always considered a fraud. All right, question number 3. Which is not a risk assessment procedure? A, inquiry. B, inspection. C, observation. And D, reperformance. You may pause this video to think. The correct answer is reperformance. Reperformance is a substantive procedure, not a risk assessment procedure. Okay, for question number 4, who participates in the engagement team discussion on risk? A, only the engagement partner. B, only the audit manager. C, all key audit team members. And D, only the internal auditors. You may pause this video to think. The correct answer is letter C, all key audit team members. According to PSA 240, it requires all key team members to participate. All right, question number 5. What is a characteristic of a significant risk? A, it can be handled by standard audit procedure. B, it involves low inherent risk. C, it may involve fraud or complex transactions. And letter D, it doesn't require special consideration. All right, you may pause this video to think. The correct answer is letter C, it may involve fraud or complex transaction. Significant risks often involve high estimation. If there's always high estimation, the complexity of transactions, the complexity of the business, the complexity of the structure of the company, or if there's a fraud. These are a few characteristics of a significant risk. Okay. All right. For question number 6. Which of the following is true? A, all risks can be addressed through substantive procedures. B, some risks require testing internal controls. C, substantive tests are always more effective. And D, control tests are optional. All right, you may pause this video to think. The correct answer is letter B. Some risks require testing of internal controls, because some risks cannot be addressed by substantive testing alone. All right? Okay, now let's go to question number 7. When should the auditor revise the risk assessment? during the planning phase, after the audit is completed, C, if new evidence arises during audit, and D, never. You may pause this video to think. The correct answer is letter C, if new evidence arises during the audit. So remember the dynamic. Risk assessment should be updated based on audit findings. Now let's go to question number 8. The difference between fraud and errors is primarily A, the size of the impact, B, accounting treatment, D, auditor's responsibility, and D, intent behind the act. Okay, you may pause this video to think. The correct answer is letter D, intent behind the act. So remember, fraud is intentional, error is unintentional. Okay, now let's move to question number 9. Which of the following is not typically discussed in engagement team meetings? A, risk of fraud. B, procedures for going concern testing. C, areas prone to misstatement. And D, audit report formatting. You may pause this video to think. The correct answer is letter D, audit report formatting. Oh, okay, sorry. Let me go back. So team discussions focus on risk, actually not on the formatting of the final report. All right, so yeah, formatting of the report is more on aesthetic, right? Now let's go to question number 10. Risk assessment procedures are used to detect all material misstatements, B, eliminate detection risk, C, obtain an understanding of the entity, and letter D, replace substantive procedures. You may pause the video to think. The correct answer is letter C, obtain an understanding of the entity. So these procedures help auditors understand the entity and identify risk areas. I think that's our last slide. Okay. All right. Thank you so much for your attention and participation for today. So keep studying. And remember that continuous learning is key in this profession. Keep practicing and answering Sipali type quizzes or questions. I have more Sipali type questions in the shorts. So please follow my channel. So if you found this video helpful, please give it a thumbs up, share it with your fellow students, and subscribe to our channel. And look at the shorts videos that I have here. I think twice a day I upload sample questions for Sipale. That would be very helpful for you. I'd like to add some more, but because I'm also working now, this is only a sideline, so I cannot put on more of my time here. So, but it would be really, really helpful if you're going to subscribe to our channel, so I can have more videos and tutorials to upload here that will help you in your Sipale exam. All right, so thank you so much for your time.